Hello, everyone. This is Bruce Clark here at New Clients Incorporated. I am the CEO and founder of the company. And first and foremost, I'd like to thank you for taking time out of your busy schedule. Your time is valuable, and my goal today is to provide you as much value as I possibly can in helping answer any questions you have about buying or selling an accounting firm, which are topics we're going to be discussing. A little background on myself. I started in the accounting field many years ago, actually about 50 years ago to be exact. I was 20 years old when I came into the field. I came in a rather unusual way. I came in as a salesperson. Now, what's interesting is back in the early 1970s, which is the time frame we're talking about, sales and accounting were never really discussed in the same conversation. They were like uniquely different topics, and actually, many of you on this call may not even be aware of this fact, but prior to 1979 in the United States, if you were a CPA, you were not allowed to market your services. How crazy is that? But it's absolutely true. But prior to 1979, I was working in my father's accounting firm, which was a bookkeeping and tax practice in southern New Jersey, as a salesperson, going out each day and bringing in business for the practice. And we weren't governed by the same rules as CPAs because my dad wasn't a CPA. He was what was known as a licensed public accountant. So consequently, long before the CPA profession was allowed to market and actually go out and ask people for their business, at Garden Accounting Service in southern New Jersey, we had been doing that for years. I helped my father build one of the largest small business accounting firms in the state back then. Subsequently went out, started my own practice, and built and sold 2 practices over my career. And right around that same time, I realized that while CPAs were now allowed to market their services, they didn't know how. So it was really from that simple realization that I decided to create training programs to teach them what we had done so well at Garden Accounting Service, which was how to go out and get business, how to develop leads, how to give a sales presentation. And as that process continued over the years and we started to develop, success, we had a lot of clients that would come back to us for information about selling their practice. And the fact that I had already done that 2 times, I was able to counsel my clients on how to sell their business. So we've been doing that in earnest since, like I said, the late 1980s, and to date I have been involved in the sale of over probably 1,000 accounting firms nationwide. NCI has clients all over the United States, over 4,000 firms we work with in buying, building, and selling an accounting practice. We have clients up in Canada, in England, and as far away as Australia. So we have a pretty far reach and impact in the marketplace over the last 35 years. So that's my background. So let's get started what we're going to be talking about today. Number 1 topic will be, of course, determining the value of an accounting practice. Now, this has changed considerably over the past 3 years. And when we get into that part, I'll explain to you how it's changed. And actually, it's now favoring buyers more so than sellers. We're going to cover performing due diligence on a practice. What are the steps to take to make sure that what you're buying is what you think it really is? The normal terms to purchase an accounting firm today. The various finance options that exist in the marketplace. Many banks, traditional lenders, don't like financing what they consider a soft asset, which is an accounting firm. But we do have some good sources that will help you with that process. And then I'm going to go into detail my firm's process on how we sell an accounting practice when we get a listing and what gives us more value in the marketplace than any of my competitors. We'll have some frequently asked questions, a Q&A at the end, and that will pretty much cover a lot of what we're going to be talking about. So what are some of the most important aspects when it comes time to sell an accounting firm? Well, number 1, and probably most important, is profitability. Now, interestingly enough, up until about 3 or 4 years ago, profitability, while it was always considered, was not one of the main aspects of developing the value of a firm. For the longest time, valuations were based anywhere between 75% of gross annual billings to as high as 1.5 times gross annual billings. So it was more a function of gross annual billings than it was seller's discretionary income or EBITDA. Now that has started to change over the past several years, where now there is a lot more focus on profitability and not so much just on the gross annual billings. Another determining factor is the type of clients. What type of clients are you selling as a part of this process? And this is kind of funny because when I first started in the business all those years ago, and we were targeting, small business clients to handle their bookkeeping and tax work, and we were teaching our clients how to do that, meaning these CPA firms that were now engaging me and attending my seminars. We've done over, I think, 400 seminars, during this 25, 30-year time frame where we were teaching our program. And when we first started, and I would talk to a CPA and he would say, well, what are the type of clients you're going to get me? I would say, small to medium-sized business bookkeeping work. And they would turn their nose up to it. They felt it was beneath them. What's interesting now is we have private equity money coming into the marketplace, buying up accounting firms all over the country. And guess what type of clients they most favor? What is it that they want the most? Small to medium-sized bookkeeping clients. They love the repetitive monthly billing aspect of those clients. They understand, first and foremost, that smooths out cash flow and makes the business much more valuable than, say, a 1040 practice. The next factor is location. Not necessarily where you are in your local market, but where you're located in the United States, because valuations are impacted by whether you're in California or whether you're in New York or maybe northern New Jersey. And again, having sole practices all over the United States, we're very familiar with where these different trends are developing and where the valuations change based on location. Next is the importance of transition. Critical in terms of making sure that after the fact, after the sales close, that your clients are going to be handled in the proper fashion and that they're going to be informed in a manner that doesn't create a mass exodus from the accounting firm. Because more than oftentimes, there's going to be some type of seller note. So you want to make sure that those clients are being cared for so that when it comes time to get your payments, you're going to receive what you're due. And then last, of course, is staffing. And that is a major aspect today because of the recruiting problems. And I'm sure many of you on this webinar have experienced this. The various recruiting problems that are faced across the entire country. You just can't get good people anymore. In fact, this has led to a increase in outsourcing for the accounting firms, sending work over to India and the Philippines, etc. And we could talk about that, but that's a topic for another day. There can be some good value in doing that, okay? And NCI actually works with one of the main providers of outsourced services in the country for our clients who are having problems with staffing. We're actually seeing companies buy practices not just to get the billings, but to get the staff. The staff has almost become as important in the valuation process than the actual clients themselves. Who would have thought we would have ever seen something like that occur? Certainly not I. Next, due diligence. What are the steps you're going to take in order to make sure that the practice you buy is giving you everything you want? And how can you ascertain that the clients are what they are, the profits are what they are, etc. And then how NCI goes about listing your practice. And first we start with the general information disclosure, meaning you don't want to give too much information that's going to specifically identify your firm in the marketplace. Why? Because your competitors could come across this. It's just not a good thing to have out there in the general marketplace. So when NCI gets a listing, we create a general overview of what that practice consists of, annualized billing, general location, profit margins, staffing, etc. And then once we have received a signed confidentiality agreement, these are the first two steps we take in pre-qualifying buyers, and most importantly, a personal financial statement are received. Okay, then we get into the details about location, who you are. And actually, before we even tell them who you are, we will call you and tell you who they are, because there may be people on that market that you don't want to or wouldn't sell your practice to. This allows you to remove anyone that might fall into that category. And then the next step, once we have a buyer that's interested, and we've had probably a Zoom meeting or two, or maybe you visited their offices in person, is we want to get some sort of deposit. As the old saying goes, money talks and everything else walks. So we want to get a deposit. NCI will provide a form for a buyer to create what's known as an LOI, or a letter of intent. And then once all this happens, the buyer is going to want to review tax returns, probably at least 2 to 3 years, financial statements, bank statements, etc. Typically, a client list of the actual clients, names, locations, type of industry, that is not released until after closing for obvious reasons. You don't want to, what if you give that out as a part of the due diligence process, and then all of a sudden, for whatever reason, the sale doesn't go through, this person now has your client list, okay? Obviously not a good thing. All right, so what are some of the normal terms to acquire a practice in today's competitive marketplace? I want to add that the competition has really heated up for buying firms. Now, what we have been seeing is a lot of cash purchases. And as buyers, I know you don't want to hear that, and we'll cover that later. But the reality is, if you're selling a practice, you want to try to get as much cash up front as possible, because no one really knows after the fact, once you've transitioned the business and you're no longer a part of it, whether or not the new owners are going to take care of the clients the way you did. So clearly it's to your favor and advantage to get as much money up front. We've been seeing a lot of deals closing at 80, 90% cash at closing, with anywhere from 10 to 20% on the seller note. If we're using the SBA is going to require a minimum of 10% cash infusion by the buyer. And then typically the balance would be paid by the SBA to you, the seller, at closing. Some buyers want to do a small deposit, anywhere from 25 to, let's say, 40%, with the balance paid over a period of time, what we call retention, right, or based on collections. Now, clearly that's better for a buyer, because they're paying based on what they receive and what they get. But then again, as a seller, again, not the best circumstances, because you don't know what's going to happen after the fact. What NCI likes to negotiate is a 1-year look-back period subject to an 85 to 90% floor. What does that mean? It means that at the end of that first year, or let's say 13 months, you total up the billings, and there can be a discrepancy or a shortfall up to 15% of the gross annual billings, and the buyer will receive a refund based on that. But it stops your losses at the 10 to 15% level. So you can see that that's a safer way if you're a seller to ensure that you don't end up having someone drive off 50% of the client base and you not get paid. And the guarantees I just talked about that, typically they are going to require a non-compete. We see as general rule anywhere from 25 to 50 mile radius around the office for up to a 5-year period. You have to be careful that if the non-compete is too aggressive, it may not be enforceable. And there are a number of states in the country where non-competes are not enforceable, California being one example of that. So now on financing buyer information, what is going to be expected for you to qualify for funding? And first, of course, is you're going to fill out a credit application. There's a CPA form that's filled out that gives an overview of the practice that you're requiring. This is another requirement by the SBA. They're going to require tax returns, typically 3 years, full copies, personal and business tax returns. If you're currently in business, they're going to want to see an updated profit and loss statement for you and for the business that you're buying. And then a comparable profit and loss statement from the previous year if that's available. So these are some of the things that any bank, and especially the SBA, is going to require as a part of the financing process. Next is the practice evaluation profile. That's the form that I mentioned that is required by the SBA. And then a current year-to-date profit and loss statement within the last 6 months on the practice that you're buying. And then again, 3 years tax returns, full copies, etc. Now, what are some of the disadvantages? Excuse me, I slipped over a slide. What are some of the advantages of buying an accounting firm? For those of you who are on this webinar thinking about doing that. Well, obviously the first one, and probably the most important, is you have immediate cash flow. You're buying an existing stream of income, and there is tremendous value in that. You're buying a tangible product. It actually exists. More than likely, you're going to get the website, phone numbers, office location, furniture, all these things that an established practice will have. You have an established presence in the marketplace. We just received a letter of intent for a practice we're selling in Charlotte, North Carolina the other day. And one of the real valuable aspects is this firm's been in business for, I think, 20 years. They have been growing really nicely over the past 3 or 4 years. And most of that growth is coming as a result of their reputation in the marketplace, all from referrals. So again, that has tremendous value as well. By buying an established base of clients, there is the distinct possibility to offer a wider array of financial services. So financial planning, consulting, if maybe the practice isn't doing payroll, you can bring payroll services in. So there are those opportunities to expand revenue streams. And then, of course, you start out, you have a base of clients to receive referrals, which is what I just mentioned with respect to the Charlotte practice that we received a letter of intent on. So what are some of the disadvantages of acquiring a practice? Well, first and foremost, of course, is the cost. You're probably going to spend anywhere from 1 to 1.5 times to buy those clients, which can be expensive depending on how you view that. If you run those numbers out over 5 years, maybe even 7 years, it's not that expensive. Assuming you keep the clients, you're able to grow the business, then it can end up being a good situation for you. Oftentimes, there's no guarantee the clients are going to stay with you. In fact, there are a couple of my competitors out there, brokers, who they will tell you, if they're representing you on the sell side, that you don't want to offer any guarantee. Now, I want you to think about that. Put yourself in the buyer's position. It's not a good place to be. You want to buy a practice, no guarantees whatsoever. That's why NCI suggests that 10 to 15% attrition clause, okay? It gives the buyer some semblance of, well, geez, if, everything go south, I'm not going to, end up losing 50% of this business. So there's some value to that as well. When you lose clients to normal attrition, your revenues will diminish, and then are you going to have a way to, replace that? And then very importantly, is this practice where you would like it to be? Where you want to live? Is this your choice, or are you moving to a location because that's where you could find a practice? Again, with more practices coming into the marketplace nowadays, because of all the baby boomers that are retiring, there's a good chance you're going to find something where you want it to be. NCI actually offers a program where we can do a practice search for you. We call it our Guaranteed Practice Search, GPS. We can do that search anywhere in the country or across the entire country using our extensive database, over 40,000 firms that responded to our various advertising over the past 35 years, as well as my client database of 4,000 firms that we work with in one form or another. And then lastly is the client mix with the buyer. As a buyer, is that what you want? Is it monthly work? Is it payroll? Maybe you want audit. I don't know what your wants are, but are you settling because that's the only practice you could find in that marketplace? Now we'll move to the selling side of an accounting firm. You've decided you want to put your practice up for sale in the marketplace. Maybe you're looking to relocate. Maybe you're looking to retire. Maybe you're looking to semi-retire. Whatever the case might be, this is how NCI can help you when it comes time to do that. And first, of course, is the marketing of the firm. And what we do is after we get the buyer's profile sheet, which gives us, seller's profile sheet, which gives us all the information we need, breakdown of the billings, percentage of write-up, tax, audit, whatever the case might be. We will create a web page, again, keeping confidentiality in the uppermost of our minds, not giving any information that's going to allow someone to look at that information and say, oh, I know that's Joe Blow's practice, in LA. Once we've created that, we will send it to you, copy the web page, make sure all the information is correct. You can make any adjustments that you feel are necessary. And then we will post that to our website. And typically the first step that I take when I get a listing is, again, because I have clients all over the United States who know me and trust me, okay? Remember, we have been involved in building all these practices. Some of them are multi-million-dollar firms today as a result of what we taught them. So there's a tremendous value in that, trust factor, if you will. So when I call a client in the market and I say, hey, I have a practice that was just listed, they will listen to me. Whereas opposed to if they just get a call out of the blue from some broker, they may not even take that call. So we have our 4,000 firms across the country. We'll make personal phone calls into the market. We will create an email campaign around the practice, highlighting its positive aspects. Send that email campaign out numerous times. And then once we get a response, as I said, the first thing we do is we start that pre-qualification process. And interestingly, I recently learned a couple of my competitors, and these are brokers that are considerably larger than NCI in terms of the number of firms they sell, actually don't pre-qualify buyers financially. And I'll explain how that happened. I received a listing for a very large practice in Florida through a website called DealStream. And we promote practices on this website as well. So I received a listing and I see it's a nice practice, it's large. I think they were doing $2 million in sales. write-up and tax practice. One of the practices that a lot of people are looking to buy. And it said that, on the profile sheet that you get as part of this email campaign that they sent out, that the broker was willing to co-broker. So I reached out to him. And as part of that process, what I learned was he had over 100 NDAs already on this very large practice. And I'm thinking, wait a minute, something is not right here. When you put a $2 million practice into the marketplace, you do not get 100 NDAs coming back. I don't care who you are, how large your client database is. That's not going to happen. So what I come to find out is, yes, he got all these NDAs. I said, well, have you financially qualified these people? So we don't do that. So you don't do that. You're selling a $2 million practice with a purchase price, I think that was like $3 million. And you're not asking whether people, or trying to determine whether the people even have the money, should they decide to buy this business, that they want to? I said, that's insane. We would never do that. Okay, why? Because it's a waste of time. You get a lot of what I call tire kickers, okay, that would, like to buy your practice, but cannot put together the necessary assets, or don't have the necessary assets to make that desire a reality. So the bottom line is, we don't go any further until NDA in hand, personal financial statement. And then, as I mentioned, we will then contact you, tell you who the person is, what their financial situation is, and then only after you tell us okay, will we put the two parties in touch with each other, okay? A lot of these negotiations now are being done using Zoom, which is obviously a great advancement in technology, and one that we use quite frequently. You get to see who this person is, they get to see you, etc. So it's a great way to do it. We will schedule a Zoom meeting, get both parties on the call. Now, prior to this, we've already given them an overview of the practice. Oftentimes we'll not send financial information at this point. It just depends on who we're talking to. But we want to, get a little further into the process before we start releasing your tax returns. Okay, again, we're not going to release a client list, that's for sure. We sometimes will take a client list with redacted names so they can see the average fees, the type of business that it is. That's fine, but no distinct information about who it is actually that you're providing services to. And we will go back and forth between the parties and negotiate the sale and try to get the price and terms that we have established, and that's done when we initially talk to you about the listing. We have tremendous experience in understanding how to value the practice, okay, and what is going to be a good price for you to acquire, in the sale of your accounting firm. We also will discuss with them guarantees, whatever we've agreed to, and then of course we'll establish a closing date. Prior to that, we will work on the financing aspects, submitting information to various lenders that we work with. Go to closing. We get paid our fees at the closing table, just like you get your money. And then you enter the transition period, which we will discuss with you what to expect as far as term. Typically what we recommend is after closing, the first 30 days are included as part of the sale. In other words, you're not going to charge the buyer anything for your time during this period. Anything beyond that 30-day period, and again, this is all subject to negotiations, but anything beyond that 30-day period will generally be the negotiated rate. So maybe in your market, CPAs are getting $175 an hour, and that's for actually doing work. So if you're actually processing tax returns for this individual, okay, it's not just for client introductions, staff introductions. That's not what we're talking about. Where you're actually physically doing work, then you will be paid based on this agreed rate. We then get into the legal documents, NCI. Excuse me, I lost my place here. Okay, back on track. Apologize for that delay. All right, so what is it that NCA offers that makes us, in my humble opinion, better than anyone else in the market to sell your accounting practice? Well, number one, we are salespeople first and accountants second. Now, you might say, well, what do you mean by that? Well, most of my competitors, and I know them well, many of them are former CPAs, and there's nothing wrong with that, okay? That can be a good thing because obviously, you're part of the same club. But how good are they at really selling? Because really, at the end of the day, what we're talking about here is sales. Presenting something in a very positive fashion so that the person on the other end of that call or on the other end of that Zoom meeting can see the various advantages and having the negotiating skills to be able to bring their sale to a successful closing for you. We have over 35 years experience in not just building over 4,000 firms nationwide. We have a database of over 40,000 accountants who have responded to our various ads over the past 35 years. And here's one thing that we offer that no one else in the marketplace can provide. Because of our experience and background in sales and in training these 4,000 firms, we provide at no additional charge what's called our Online Sales and Marketing Academy. Now, about 4 years ago, at the behest of my youngest son, Tyler, he had suggested, Dad, we need to take this seminar. We used to do the seminar. It was a live seminar, 3-4 days. We used to take the seminar all over the country. But, marketplace is changing, technology is changing. So he encouraged me to put all the training online, which we did. And now, when we broker a practice, we give this training, which sells for $1,995, to whoever buys your accounting firm. And you might be saying, Big whoop, how does that help me? Well, think about this for a minute. You sell your practice. Let's say you get 75% closing in terms of, cash paid. But there's a note for 25%. Well, who would you rather sell to make sure that you're going to get that 25% paid over the next 3 or 4 years or whatever that time frame is? Clearly, it's someone who's not just sitting on the practice, but who is going to grow it and knows how to grow it. And sadly, most CPAs are not very good when it comes to doing that. So we're going to show them step by step the same exact process that was used to develop these 4,000 firms. As I said earlier in the presentation, I have clients that within a 5-year period of startup went from 0 to $1 million in sales or more, okay? I've had clients who we've trained and worked with go from a startup to $500,000 in sales in 6 months. Don't believe me? Go to my website, watch at www.newclientsinc.com and watch some of the video testimonials of my clients, and you can see for yourself what I'm saying is so. So this gives tremendous value to both buyer and seller. And we're available to support that program. Any questions they have as they go through the training, all they have to do is pick up the phone and call us. We offer several excellent sources to finance the purchase of the practice. And again, as I mentioned previously, traditionally banks don't want to do this kind of a deal. We work with the largest SBA lender in the country that finances accounting practice sales. So they have the experience and background in dealing with this unique marketplace on how to put the sale together, how to value the practice, and they have the funds, of course, to make all this happen. And oftentimes our commission rate is less than what most other brokers will charge. And if you're an NCI client and you list your firm with us, then we give anywhere from a 1% to 2% discount, depending on the type of program that you purchased from us previously. Some of the other advantages of using New Clients Incorporated, One, we protect your privacy by concealing your identity. As I mentioned previously, we require a signed NDA prior to release of any sensitive information. We pre-qualify buyers financially, so you're only meeting with capable professionals. We'll handle all the negotiation. You'll never have to argue price, terms, guarantees, etc. You can be involved in the process, and we want you involved in the process. But again, our sales and negotiating skills are top-notch. We've been doing this for 25, 35 years, over 1,000 sales completed across the country. We know how to get the job done. We'll provide first draft of the agreement of sale, or what's known as the asset purchase agreement. And one of the nice aspects of this, it will help reduce your legal fees, because if you go to an attorney and you ask them to create this document from scratch, that could easily cost you $5,000 or more right there. We will make proven suggestions to facilitate the smooth transition between you and the new owner. We actually have a number of different sample, what we call transition letters, that we will provide to you that can be customized to fit the terms of the sale and the circumstances, that will be sent to the clients at the right time to introduce the new owners of the firm. And we typically like to couch this as a merger, because the last thing you want to do is send out a letter to your clients, many of them who have been with you maybe 20 or 30 years, and say, oh, by the way, here's your new owner, I just sold you. Not a great way to keep retention at 90 to 100%. We will market the practice through our website, our huge in-house database, and as I mentioned, our client list of over 4,000 firms that we help grow their businesses. So as you can see, we offer a tremendous amount of value when it comes time for you to sell your practice. All right, so here are some of the frequently asked questions. Number one, how available is the purchase of an accounting firm? Well, that's a great question. And if you asked me that same question 3 years ago, I would have told you not very. It used to be that when we got a listing, in most reasonable markets, meaning if you're not in a very rural area, okay, but you're in, let's say, a suburb of LA or San Diego, or you're in a suburb of Georgia or in Atlanta, okay, we would have, once we sent out the email announcing that we have this listing, typically within a week or two we'd have 10 replies or more. That's no longer the case. And again, the reason being is because there are more and more practices coming into the marketplace, creating what used to be a seller's advantage to a buyer's advantage. And as I just mentioned, this is changing, and that's how it's changing. Next, how do I determine the value of my practice? Well, as they say, beauty is in the eye of the beholder, but there are some basic guidelines to follow. Number one, profitability, most important. You see anywhere between 20 to as high as 50, 60% for profit ranges. I would say the norm is in the 35 to 40% range. Obviously, firms with higher margins will tend to sell for higher multiples. And most practices we're seeing selling today, if you use the valuation of gross annual billings, anywhere between 100 to 130% of gross, with many occurring in the 125% range. Next, what are the normal terms to acquire a practice? You can expect to make a down payment between 20 and 50%, with the balance being paid over anywhere from 2 to 7 years. More often than not, traditional lending institutions, again, shy away from this. We already talked about that. But we do have several sources to help finance the sale. And many practices are now selling for or close to all cash. And obviously, if you're a seller, that's what you want. So, okay, how do you apply if you're ready to get started? We'll provide you with information once you submit a confidentiality agreement and a financial statement with respect to how you can apply for financing to acquire a practice. Is the equipment typically included in the sale of the business? Sometimes it depends. Each situation is different. Our financing source will provide equipment financing if it's not included in the purchase price. What can you expect as far as transition? And again, as I had previously discussed a little bit, it varies, but normally after the first 30 days of closing, you'll provide full-time assistance in transferring the practice. Anything beyond that will be the negotiated rate for, based on an hourly rate. And then actually some buyers, and we're seeing this more and more, they want to keep you involved in the practice after the sale has closed. Now, some sellers like that, and they want that. I was just negotiating a sale the other day for a former NCI client in Seattle. I have a great buyer lined up. It's one of these private equity groups, and we'll talk about that in a second, that are buying up firms all over the country. And he said to me, I want to kind of like semi-retire, I want to stay around. And I said, well, this particular buyer wants to keep you involved, allow you to retain a 15, maybe 20% equity position, not just in the business you're selling, but in the business they are developing, meaning as they acquire practices across the country and build this company, your 15% is part of that big pie. So obviously that's a tremendous opportunity, depending on, it's not something that you want to do. Are there any clients that any guarantees that the clients will remain? Yes, in most cases, the sales we have been involved with include a 1-year guarantee, and I'd already mentioned what that is, anywhere 10 to 15%. So it limits your exposure going forward. How does that work? And at the end of 13 months of closing, all the fees are added up. If it does not equal the gross annual billings of your agreement, you will receive, the buyer will receive a refund based on that deficiency, using the exact same multiple that was applied to determine the purchase price. So as an example, if the buyer paid 125% of gross to purchase a $100,000 accounting firm, equaling a purchase price of $125,000, at the end of 13 months, buyer's collections only reached $90,000, leaving a $10,000 shortfall. The buyer would receive, in this particular instance, a $12,500 refund of the purchase price. And oftentimes, money has been placed in escrow, can be controlled by their attorney, your attorney, whatever the parties agree to, so that you don't have to write a check back. The money's already sitting there. If the guarantee is exceeded, then that money is released to you after the guarantee period has expired. We just had a sale last year that closed about a year and a half ago, and all the money was released from escrow. Okay, so it was about $160,000. It was a pretty big practice sale. It was $160,000 in escrow. Both were NCI clients, which was nice because they know how to grow and build a practice, and that sale turned out very well for everyone involved. How is the buyer paid in the event, of a refund? And as I just mentioned, the owner is financing, an adjustment will be made to the remaining balance of the note. If it was an outright purchase, there's normally an escrow account set up equaling 10% of the purchase price. This amount is used to cover any shortfalls via the guarantee. Should the shortfall exceed the escrow amount, the buyer would then be paid directly by you, the seller. And that pretty much sums up everything. I hope I've covered everything in detail for you. I think I have. For any questions and you'd like a complimentary evaluation of your firm's worth, you can reach me at 856-304-1035, or you can email me, Bruce, at newclientsinc.com. And again, I would encourage you to go to our website. For buyers, you can see what listings we currently have. I will point out that being right after tax season, most of our inventory has already been sold. It was sold probably at the end of 2022. But now we will start to get an influx of listings. So you want to check back on the website frequently to see what new listings are coming in. And you can review some of our video testimonials, client success stories. There's a lot of great information on the website. And if you have any questions, of course, you can call me. Again, I do want to mention to the buyers, our GPS program, if you're not finding the practice you want, NCI can successfully go into the market and help you acquire and find that practice. We recently had success. Last year, I had a client engage us for the GPS program. She wanted to buy between a $1 to $1.5 million firm in the Boston market. She gave us a breakdown of what she was looking for, type of client. She wanted something within 25 miles of her current office. We put this program into play, and I think it was in about 3 weeks, we had found a buyer. It was a couple partners looking to sell a $1.2 million firm. They closed last September. Purchase price was close to $1.4 million. And I spoke to the buyer just back about a month ago in tax season. I will traditionally follow up after the sale. It's another thing I don't think my broker competitors do. I will follow up with buyer and seller to make sure everything's going well. There have been instances in the past where there's been an issue and we were able to intercede on the behalf of the buyer or the seller to keep the sale on track, to keep it in a successful light so that everybody ends up being happy here. That's our ultimate goal. So again, thank you for all your time. Appreciate it. And I look forward to hearing from you hopefully in the very near future.